Hey guys, Chris with CJ Solutions and Insurance, and today I want to talk about a coverage I've had a lot of discussions about lately. I'm in Southern California. We all seen what's going on with the fires out in Los Angeles, and that coverage is coverage D. And the reason we're having so many discussions about it is that's the coverage that's most likely going to pay out first before we get into talking about reconstructing your home, other structures and fences and things like that. You're going to want to look at coverage D. And if you have a California Fair Plan policy, that's going to be in the form of fair rental value. If you have a traditional homeowners policy, that's going to read as loss of use. Okay, the coverages are similar, but the difference is the loss of use is a broader form of coverage. Okay, now before we get into the coverages, guys, I just want to stress to take a look at your coverages. Make sure those coverages are adequate now. Today is Friday, January 10th. The winds are supposed to die down over the weekend, but they're supposed to pick back up coming next week, Monday, Tuesday, into Thursday, I think. Okay. You don't want to be checking your coverages once you're being evacuated, once you have a fire in your area. You know, what you have for coverage at that time, that's the coverage you're going to have. Okay. The last thing you want to be thinking about is your policy, your coverages. You have enough, especially if you have a California Fair Plan policy. The reason is the California Fair Plan policy does not run a replacement cost estimator. Okay, I will show you the notice here. This is a deck page from the California Fair Plan, and it has big bold letters here, important notice to insured. That's you. It's telling you the California Fair Plan does not run a replacement cost estimator. They are not responsible to make sure that these coverages and these limits are adequate for your property. That falls on you, your agent. So make sure you guys review these. If you haven't reviewed them in a couple years, it's time to review them now. Because your agent, hopefully whoever that is or agency, they have run a replacement cost estimate somewhere else to get the numbers that you see here. If they haven't, talk to them. Make sure, double check, guys, okay? Because I've seen these coverages range all over the place. Especially when it comes to you purchasing a new property, as agents are basically bidding for these for the business, right? So you know you can adjust the numbers a lot, and maybe it looks better to the real estate agent because this premium is lower. It's lower for a reason. The coverages are less, right? Maybe they need it to qualify. Loan to value ratios look better. They need this policy lower. So guys, the range here it can vary quite a bit. Okay, so make sure you're good to go with the coverages here. Secondly, I'll save you the trouble. If you call the California Fair Plan California Fair Plan, the agents that pick up they're not agents, they're representatives. They're not going to talk to you about coverages. Okay, they are not agents. They're not licensed. They don't want to get into coverages. They're going to refer you or your agent to the California Fair Plan jacket that you can find on the California Fair Plan. I don't think you, the consumer, the insured, has access to it, but your agent does. If they need help finding that, let me know. You can download the policy jacket, and it explains in detail the coverages here that you see here on this page, what they cover, what they don't cover. Okay. When it comes to coverage D, fair rental value, they're gonna pay the fair rental value of your property, whether it's tenant occupied, owner occupied. That's how this coverage works. Whatever the fair rental value of your property is, that's what they're going to pay you minus expenses that you're no longer responsible for, right? If your property burned down, you're not having to pay utilities, you're not having to pay maintenance anymore. Take those out, and that's what they're going to pay. They're going to pay in 30-day increments, okay? If your property is still standing, right? Hopefully it did not burn to the ground, but you were evacuated. Maybe you were evacuated and you didn't have access for a week, 2 weeks. Fair rental value will pay up to 2 weeks of the fair rental value for your property that you didn't have access to during that time. Okay, so you can find coverage for that under coverage D here as well. If fair rental value is not enough, the $27,900, you can elect to use up to 10% of coverage A, which covers your main dwelling. But if you use this for fair rental value coverage, you're going to subtract whatever you use from this limit here. Okay, so just make sure you talk to your agent, make sure you have enough coverage to be able to subtract from your coverage A dwelling limit and use it for fair rental value. You obviously want to make sure you have enough coverage to still cover your dwelling. Okay, now if you have a traditional homeowner's policy, it's going to look like this in the form of loss of use. In this case, we have $55,800. It generally also covers fair rental value, but it also includes additional living expenses. That's going to be anything in addition that you don't normally pay, right? If you lose the use of your property, you're most likely probably going to rent a hotel, a room. If you have a family, you're going to rent a property, an Airbnb. You're going to want to save those receipts. Whatever those additional living expenses are, you're going to want to keep track of them. The better ledger that you keep backed up with receipts, the easier you're going to make it on your insurance company, the faster you're going to get paid. Okay, so keep the receipts, guys. This can include your food bill, right? Your food bill is probably going to go up. It's going to be crazy. You're going to be evacuated. Maybe you're not going to want to cook, right? So you're going to be eating out more. You're going to be Uber, DoorDash, whatever that is. Maybe the hotel, the room you rented, there's no kitchen anyways, right? You guys are going to be going out to eat. Maybe that hotel or that property you rent, they don't accept pets, animals. You're going to have to board those somewhere else. If you have larger animals like horses, obviously, you're going to have to board those somewhere else. Keep track of those additional living expenses. Now, I've also had people tell me, oh, they're just going to go with the forced place insurance. I'll let my mortgage company just pay for it, right? Bad idea, guys. That protects the financial investment the bank has on your property. They're going to get their money back for the loan that they have on your property. It's not covering the property. You're going to be on the hook to rebuild that property in those cases. So not a great idea, and it's also very expensive. So you might as well find that coverage elsewhere. Do your homework. Try to find coverage for your property. Okay, if you don't have coverage, if you have questions, I'm here to help, guys. Please reach out. Stay safe, everybody. Talk to you soon.